Hi everyone and welcome to Lendi's monthly financial and property update. This month is June. How is it June already? I don't know, but it is. And we wanted to follow up on the series that we've been doing for the last couple of months, which is all around the current economic situation, the climate, and more importantly, just cutting through what is out in the media with reality, data, and facts. And in order to do that, we've got David Hyman, who's a co-founder and CEO of Lendi, here to help us understand kind of what's really going on out there at the moment. So welcome, Dave.
Thanks, Zara. Great to be back.
Good to have you back. So we're still working remotely, still in different locations. So that hasn't necessarily changed just yet, but we are seeing some changes to that. A few people we've seen have gone back to an office environment. But I guess for a lot of people, the current economic situation is a little bit confusing. One day we're up, one day we're down, and now we're officially in a recession. It would be great to hear from you on your 2 cents worth on the current economy, and what should we all be either worried about or thinking about for the future?
Yeah, so I mean, it's been really interesting. We've covered this the last couple of months. It's been a really, really interesting time to be talking about these topics, because not only did we have this huge health crisis that came and sort of hit us really, really quickly, and obviously the impacts were felt across every part of both the economy and everyone's communities as well. I think that was sort of the difference in this situation. But as quickly as it's come, it seems like we're sort of coming out the other side. In particular in Australia, we're very, very lucky. I think this is a great example of the lucky country striking again. In terms of the numbers we're seeing in Australia and New Zealand, a stark difference to what we're seeing in economies like the US and the UK. It's just heartbreaking to see some of the numbers still there on cases and deaths, and not to mention the political and social issues that are happening in those countries as well. But if we sort of, I guess, dive down into Australia, when this all hit, we obviously had a really, really sharp and sudden shock to the economy. So in relation to the property market, open for inspections were effectively stopped in their tracks. Auctions were stopped. And while the industry did a really, really good job to very quickly embrace digital and bring things like 3D inspections and digital auctions into play, we saw a pretty sharp downtick initially in listings, in new listings. And while I think consumer demand has been pretty strong through this period, both in the property market and also some of the spending data that's come out. I saw some ANZ data the other day that was looking relatively healthy. And others, MasterCard, Visa, the likes of Afterpay and Zip have also put some data out that shows that consumer spending has been pretty resilient. I think when it comes to the property market and the broader economy, there are certain things, certain truisms that just kind of play out in these sorts of situations. So in the property market in particular, the number of listings ultimately drives the number of transactions. So this is what we call in the industry kind of stock on the market. And that fell really, really sharply towards the back end of March into April. And I think April stock levels and sale levels were the lowest levels we've seen since 1991, which is just staggering. Depending on where you live in the country, there's been a different sort of velocity of the lockdown easing. What's happened since is we've seen the lockdown restrictions starting to ease. We've seen the property market open back up. We've seen confidence return back to sellers, with the auction clearance rates holding pretty strongly, actually. So after an initial dip, this weekend they were just shy of 60%, which is still a really strong result considering we're in global recessionary style environment and the pandemic. I think that's given sellers the confidence to continue adding their properties to the market. So May is likely to see a 20% increase in total property transactions. And since really the middle of April, we've seen kind of week-on-week improvements in the number of new listings on the market, which is only going to kind of fuel transactions into sort of June and July as those properties kind of ultimately come to market and sell, subject to the clearance rate holding. So I think property market's looking pretty good. In terms of the economy, we obviously, the GDP data was out recently, and we had the first negative quarter in a very, very long time. And I think given that was the March quarter and only the beginning of COVID-19 impacts were starting to bite, this quarter is likely to be negative as well. I think that's where the consensus is, and that puts us into a technical recession period. But in terms of the broader economy, I think what's surprised a lot of people has been the resilience of things like the share market and consumer spending and other parts of the economy. I think a lot of this is driven by the stimulus that was sort of brought in by the government. So obviously the big ones are things like JobKeeper. We've had there's sort of recently the renovation and new purchase grants that were announced over the last week. And the various subsidies to things like childcare and some of the more industry-specific packages have all really helped keep a number of these businesses afloat. I know ScoMo was talking about a 6-month hibernation. I think what it looks like is more like a 3-month hibernation based on where we're sitting today. And touch wood, a number of these businesses should be able to kind of, if they haven't already, reopen their doors over the coming month or two, which is obviously going to sort of get the economy going again and get money and jobs flowing in the right direction.
Though the renovation grants and a couple of other of the stimulus packages that the government have come out with have been really interesting, but what's the advice that you would give to people who think that might be something that they want to pick up and try and access?
So the first thing with any grant is you've got to start from a position of, is this something that you can afford and you spend money on anyway? If you pass that test, the grants are a great opportunity to kind of take advantage of, ultimately what the government's trying to do here is they're trying to bring economic activity forward to keep, in this particular instance, keep the construction and building industry flowing at a time where it's going to have sort of headwinds or downward pressure. So the renovation grants and the new purchase grants are both sort of aimed squarely at what I would describe as like the bulk of Australia. So there's they're means tested. So if you're making 6 figures or mid to high 6 figures and you want to renovate your $2 million property, probably think again. There's some limitations on both household income. It's capped at 200 grand and property prices are capped at 1.5 million. And you've got to spend a minimum of 150 grand. So there are some stipulations, but if you fall into the sweet spot, it's a great, and you've been thinking about a renovation, it's a great opportunity to bring that renovation forward. And 25 grand maybe pays for your kitchen or pays for one of those bathrooms, which is fantastic.
Yeah, I think especially now we've all been home for such an extended period of time. I know I'm certainly looking at there's certain bits of my house that I look at quite differently.
Maybe it pays for a palatial home office. I don't know.
Maybe that's a really good idea. As you mentioned before, though, obviously the grants and the packages are really aimed at kind of middle Australia, the mass Australia piece, but there are still a lot of homeowners out there who are, I guess, really still concerned about the current situation. And I think one of the things certainly that I've heard a lot is unsurety about, given that there's it's still a bit rocky out there, do they rock the boat by, really looking at a different sort of mortgage or a different refinance package, or do they just kind of hold still, batten down the hatches and kind of hope for the best? What kind of advice do you give when people just aren't really sure what's the next step? What should they do first?
Yeah, so first thing I'd say on mortgages is we've never been in a situation like we are today in terms of mortgage pricing. So just leading into the COVID-19 kind of lockdown period around the middle of March, one of the bits of stimulus that was announced, it was actually announced by Governor Lowe of the Reserve Bank, was the establishment of what's called the Term Funding Facility, which is a RBA-sponsored wholesale funding facility that the banks all have access to. And what it's meant for mortgage pricing is, if you've been out there in the market and looking, you may have noticed that there's lots of fixed rate offers out there at the moment, and that's aligned with the Term Funding Facility being a fixed rate facility for the banks. But those rates are incredibly low. They start in the low twos, some as low as 2.09%. And what we're seeing is, because that combined with the emergency rate cut that we had in March, we've actually seen the gap between the rates that people are paying and these new in-market rates widening significantly. And what that means is if you're not doing something about your mortgage, you're actually leaving thousands of dollars on the table. So if you're not sure about that next step, what I'd really recommend is speaking to a home loan specialist, using a platform like Lendi or others out there to ultimately review where you are in the market and how that compares to some of these rates and what that actually means in real dollar terms. I mean, just to use some round numbers, if you're paying, you know, let's call it sort of 3%, which would have been a pretty competitive variable rate offer prior to these coming out. And we see customers on Lendi today still paying as high as 3.5% or 4%. But if you're paying, say, 3% and you can take advantage of one of those offers in the twos on, say, a $500,000 mortgage, there's many thousands of dollars a year that you're putting back in your pocket. And, you know, that's all for a few hours of your time, maybe a couple of conversations with a home loan specialist. And switching's actually never been easier. So there's a whole bunch of one of the things that's really interesting, and we were talking about this internally the other day, was there's a number of things that we've brought to market and been working with a number of the banks to bring to market to make it easier for Aussies to switch from one lender to the other. But the lockdown period's actually brought forward a lot of that change, and you can now do a lot more via just from your home via your computer. So you can sign the application form digitally, you can do your ID digitally via video call. All of these things that you maybe had to go to a branch for before just mean it makes it that much easier to switch. And so that's our strong advice, is really just, if you haven't looked at it, look at it, spend a couple of hours. It's a couple of hours well worth your time.
Yeah, 100%. And I think I spoke to Sam the other day, who's one of heads up our inside sales team, and he mentioned that there's also kind of never before seen cashback offers. And sometimes with certain lenders, you can actually use it multiple times on different assets as well. So there's a lot of kind of upside and opportunity out there for very little time, really, when you think about what the potential upside in dollar amount in your pocket really is.
Yeah, absolutely. I think one of the things that happens in these sorts of situations, and it's the byproduct of having a very competitive mortgage market in Australia, is the banks are really, really competing for your business, and those cashback offers are as high as $4,000 per property in some instances. And that just goes straight into your loan, and it's just a great way to get a head start and perhaps even pay off some of the guilt for not having done it 6 months ago.
It's a good way to think about it. Well, thanks so much, Dave. That was a really great update. As always, it's really important, I think, that we make sure that everyone knows the difference between the kind of media hype and then what's really going on out there in the market, and keeping homeowners informed. So thanks so much for your time today, Dave.
No drama. It's always great to chat.
As always, if you guys have any questions or things that you want us to cover in these updates, then just make sure that you're adding those to the comments below. We are checking those, and we are actively creating content that answers some of those questions for you. We also have our Lendi Home Loan Hacks group over on the Facebook page, something that you guys could happily join. Over there, we've got a lot of other Aussies just like you who are asking questions around mortgages, home loans, current environment, what to do next. So we invite you to come over to that group should you choose. Subscribe to this channel, because when you subscribe and hit the bell, you'll get alerted when we have more content coming up. So make sure that you get involved. You can also check out some of our other videos, including how to negotiate your own interest rate. Sometimes the best place to start is just a convo with your current lender. So if you want any hints and tips, then make sure you check that video out as well. But thanks again for watching. See you next time, and stay safe.